So where have we got with our employer series? We started off with, most importantly, employer versus employee versus contractor. Talked about PAYG withholding, what happens when you're actually hiring a foreign employee, long service leave, work cover, and payroll tax. So that was our first series. The second one, we talked about allowances, fringe benefits, tax, and how can you also get a win-win with your team. And now today, I want to go through some of the superannuation, ETP, and a few other areas on the employer side of things. So I'll get going, and those that I guess who turn up a bit later can actually watch the recording. So hopefully my system is working. It's a bit slow motion, so we must have something to do with our internet at the moment. For those of you who haven't met me, my name's Shannon Smith. I'm the founding director of Smart Business Solutions. I'm based here in Mornington as well. I think I know half of you that are on today, but the other half who I haven't met, welcome and thanks for joining us in this. So what I want to get through today is looking at superannuation guarantee. What should you be looking at? And it's probably more than you've ever thought about when you're looking at the superannuation side of things. Employer deductions, and this is the result of some changed rules a few years ago in some legislation. Help on your HECS debt, child support, maternity, kind of paternity leave, and then termination of employment. So a few other topics that I've kind of added in there as we've received feedback from you all in going through this employer series. So let's start off with superannuation. Still got that croaky voice hanging around, but let's start off with superannuation and an employer's requirement on a quarterly superannuation. So key terms I want to touch on is, what is the charge percentage for a relevant quarter? Who is an employee? And this goes back a little bit to what I talked about in our first session. So if you haven't watched the first session on the employee versus contractor, I suggest you go back and have a look at that one. There's been a lot of changes that have gone on in the last few years on that part. And then also what's happened if it's not paid by the 28th of the month following the quarter, the non-deductible superannuation guarantee charge, and then also some of the penalties that are there. So let's have a look at what some of these key terms are. And I know a lot of this might be automated in your systems, but it's really important for you to be aware of it, because there are some parts when you look at Xero on how you might actually tick some of the boxes when you're setting up your payroll as well. So what is the percent, what we call the charge percentage? At the moment, it's 11.5%. From 25-26, it will be 12%, and then it will stay at 12%. So originally when superannuation came in, it actually started at less than 3%, and it's gradually gone up, and so it's 12%. Where this is also important to note is, what is it that you're agreeing on an employment contract basis with your employee? Are you inclusive of super as a total package, which often can be the case? You might have to record that into your Xero, excluding the super. Now, I've had some clients who have taken the figure inclusive super, put it into their accounting software, and then super's been added on top, and they didn't realise until a later point. So make sure you're really clear when you're also going back and forth with a potential employee, what's inclusive of super or exclusive. I always do my packages inclusive of super, because that's the total cost that it is to me as an employer. Some people quote it excluding. So just make sure you're aware of that, so that you've got that recorded appropriately, not only in your employment contracts, but also in your accounting software as well. So who's an employee for superannuation purposes? And again, go back to our first webinar where I went through this employee contractor, but there is an extended definition of it. The ordinary meaning as an employee, which I went through in the first series. So most of those that are, on your employment books are obviously going to be employees, but it's whether some of those on the contracting side actually fall under the definition. So excluded employees include, so these people are then excluded, non-resident employees performing all duties overseas, employees less than the age of 18 working less than 30 hours per week. That's different because previously the changes were under 18, they didn't have that situation. Private or domestic workers, unless they're working more than 30 hours a week, And before July 22, so that's when this rule came about, that if they earned less than 450 before tax per calendar month, you didn't actually have super. That was removed, so everyone does have that as well. So what's important is to look at your ordinary times earnings. So what is your ordinary times earnings base? And that kind of that is then the minimum contribution employer must make to avoid what we call a superannuation guarantee. So you take the ordinary times earnings and you pay the super on that. Now, I just highlight, and it was from 2020, but previously sometimes employees would salary sacrifice into super, which kind of reduced the requirement of the employer to pay extra super, which didn't make sense at all. Now, they got rid of that. Obviously, if an employee chooses to pay extra into super, that shouldn't be to the employer's benefit. So that was changed. And also then looking at it sometimes on a quarterly basis, just to make sure that you've actually paid the minimum amount into super that's required to. Now, your Xero system will, if you're in Xero, it will actually help calculate all of that, provided you've got your different employee earnings amount or your wages amounts. Actually, with the coding and the ticking the boxes right, it will automatically calculate a lot of that. So that gets rid of a lot of that work on your side. So for ordinary hours, it does include commissions, it does include ship loadings, any leave except for unused leave. It does include allowances and back pay. It excludes payments for overtime, though. So this is where, when you're setting it up in your Xero, making sure that when you've got the different earnings categories, that you tick whether it's subject to super or not subject to super. Now, what we've actually done is we've got, and taken from the summaries, but we can give you those details, taken from the legislation. What does it actually mean? What is considered? And this is where it's very frustrating for a lot of employers. You're expected to be an absolute employment expert. I don't know why they don't systemize it and make it universal, but unfortunately we have different definitions of what is a salary and wage for work cover purposes, for payroll tax purposes, for superannuation. We've got 10 plus definitions of what a small business is. So this is where it's really important to go to that schedule and actually have a look and go, okay, what is considered ordinary times earnings, which is your base for your superannuation, and what is then your salary and wages, and do I need to then be paying super on those? So we've gone through and kind of given you the tick boxes. What I'd always say is just making sure that you check it, set up in Xero, where, for example, overtime earnings, when you're not actually having to, that doesn't form part of your ordinary times earnings, that, we don't have to have then the super on it, making sure that you've got that set up in your Xero correctly as well. What about allowances? So some of your allowances are considered ordinary times earnings. Some of them aren't. If it's an expense allowance, it's not. So if you go back to also my session, last week's session, where I talked about allowances and reimbursements, where those aspects kind of fit. And this is where it's really important to check it and look it up while you're actually setting it up. Once you've got it set up in your Xero, and if you have to end up having 20 different types of earnings, I suggest you do that and make sure that they're very specific, so that you can just know that if I select a reimbursement, I know that it's not going to actually be subject to super, it's not going to be subject to PAYG, and you've got all those boxes ticked from that perspective. And again, leave payments as well. So that's where, I guess, for example, termination payments in lieu of notice is ordinary times earning. Termination payments, unused annual leave, isn't considered. So I understand it can be quite confusing on that side, but it's just important to get it into the right spot. So annual leave loading, not all awards have annual leave loading, only some of the awards do. So check your award to see if that's applicable on it. The ATO view is superannuation is payable unless there's a clarification that the annual leave loading is referred to as overtime in there. So that comes back to, what does it say in the award? Most likely the leave loading would be subject to it unless there's a specific reason. So again, looking back into your definition as well. Performance bonuses would be subject to superannuation. Again, bonuses in relation to overtime only, there isn't going to be super on that as well. So it's really important. What you're kind of looking at is anything that's paid to the employee that reflects, I guess, work, reflects reward for work they've done outside of the overtime would generally fall under that, potentially having that super being payable as well. Commissions, payment to contractors, back pay, directors' fees. So all those different aspects would be kind of falling into that. So when a contribution's made, now we often get this question just before June 30 when everyone starts to get a panic on that, because ultimately from a tax perspective, you only get a deduction when the super is actually paid. So the superannuation contribution is when the fund receives the contribution. It's not when it comes out of your bank account, and not when it goes when it gets paid to the clearinghouse. If it's the small business superannuation clearinghouse, there is an exception for that when it gets paid to them, and if it hasn't been allocated by that time to that fund, you can. Generally speaking, I would be encouraging you all to use your software. I would always allow, they say up to 10 days. Generally 5 days is okay, but if you can do it at 10 days, especially if you're coming up to June 30, I would always be allowing that extra time just to make sure you get it in time, so that it does get across. Now, there are limits to an employer's superannuation obligation. The maximum contributions base, that's probably not going to apply to too many people, but it can cap out at those higher income earners. Employees which have multiple employers, that can actually be, and that'll be something that'll come with your employee when they actually, if they're going to be tapped over that maximum amount from their other employer. So if you get that situation, let us know, we can always help. That you can apply to the ATO for an employer shortfall exemption certificate if they know that they're going to actually have the super contributions elsewhere, and then that does remove your obligation, but just making sure you've got that in writing. So that doesn't happen, to be honest, very often with many of our clients at all. Now, the choice of funds still applies. So a new employee, they can provide a standard choice form. They can tell you who they want their super to be paid to. Now, if they don't do that, and I see this a lot in the hospitality industry where you don't get it, or it might be someone who starts with you for a week and then they're gone. What do you do then when they don't provide that to you? You need to actually still provide that super and then basically pay that across to kind of a default fund, which is basically through to the ATO. So what does that mean from your perspective? Submit a tax file number declaration or the single touch payroll event, log into the ATO online services, enter the employee's details, and you will get a response within in kind of minutes to kind of get that across, and at least it's off your desk and it's on the ATO and up to them. You've done your part so that you've actually paid on time to an employee that didn't want to give you those details, or just couldn't be bothered giving those details, quite frankly, is what often happens. So what happens if you fail to make your superannuation contributions by the due date? You actually have a superannuation charge statement with the ATO. Now, some of you may or may not have heard about these. In the past, the ATO didn't have all of that information about what you owed in super. With single touch payroll, they have it. We can actually have within a week notifications coming to clients saying your super is overdue. So it's really important. A few reasons. I always say that, we can negotiate something with the tax office if you're going to be late, but don't not pay your superannuation on time, because there is no flexibility from an ATO perspective. Whilst they are administering the superannuation, they actually have no ability to change or extend your payment period. Superannuation, after all, isn't your money. You are actually required to pay it for the employee. I would always make that as a priority, because if you don't pay on time, you need to then pay, but you need to lodge a superannuation guarantee charge statement with the ATO, and the penalties on that can actually make it that it nearly, could double what you actually had to pay, because you've got penalties. It potentially can then also lock in these director penalties. You don't want to get one of those, and you'll get late payment fees. So what are the different charges that you're going to get on that? And the superannuation charge statement, you can fill it in yourself. You can pay us to fill it in. it's a time-consuming form. You don't want to probably pay us to do it. You know, you don't probably want to do it yourself. So really try and pay that on time. And it goes, because we have to actually calculate what their wage was, what was the shortfall. There's actually, then you actually have to have a nominal interest charge because you've not paid on time, and though the employee could have actually had that amount invested, so you're going to pay 10% interest on top of the shortfall. So you've got, what is your super shortfall? 10% interest on top of that, and then you're going to get an admin, you're going to get a penalty, and then you're going to get a $20 admin per employee as well. Now the penalty, it can be up to 200% of what the superannuation amount is. The flexibility that we've been able to go with the ATO is trying to reduce that penalty, but it's going to be at a minimum of 100% of what your superannuation was. So that's where you can literally have a double, and there's a real incentive to make sure you get your superannuation on time. So I always say to clients, if you've, you know, if cash flow is a challenge, always make sure the super is paid on time. And if we need to go to the ATO and kind of ask for assistance on the PAYG, do. But the superannuation, what has happened in the past, you know, if you have been late with your super, you may have had us advising you, look, you really need to lodge one of these superannuation guarantee charge forms. What's actually happening now is the ATO is getting your single touch payroll information, and they're actually saying, you're late with your super, you must now lodge one of these forms. So now you are actually going to be hit with the penalties, interest, and all of the above that goes with it. Whereas before, I know many clients were advised by us, no one chased them about the form. They then caught up and paid that super and hoped that it went away. The tax office now has your single touch payroll information, and they're just asking for that form. Why? Because they get the employer, they get the money paid, they get interest paid for the employee, but they're also getting the penalties as well. And the ATO doesn't have much flexibility on that, whereas we all know a bit on the ATO side, we can have a little bit of flexibility on the others, although they're getting a little grumpier these days. The ATO needs the money. They're not as willing to do payment plans as they were. So let me just touch a little bit on employer deductions, because a lot of people aren't aware of this, and these rules came about recently. So what can the employer deduct? So, you know, it comes down to what is still relevant for the employer's business activity. You need to have a look at foreign source salaries of Australian business activities. If you're paying a wage of someone overseas and the wage, and this is not going to be as relevant for a lot of clients on the call. I think there's probably one or two that are on, I can see that would be relevant. But if they're doing work for a foreign subsidiary or for a different location, then your foreign subsidiary should be paying or reimbursing for that. Otherwise, you're not going to get a deduction. So this is something that really came in and the ATO is focusing on, and it's probably not relevant to not everyone on it, but I did want to raise that is something that is been coming as a bit of an issue. The other thing the ATO brought in as well is wages and super are not deductible if you actually don't pay your PAYG, withholding, and superannuation on time. So you actually, not only will you eventually have to pay it, you're not going to get a deduction if it's not paid on time, lodged and paid on time. So that's going to be really important to be aware of, and why you really want to try and make sure you get those paid, because otherwise you are going to pay it, but you're then not going to get a deduction. And where you'll see that is we'll do an adjustment in your tax return to make it non-deductible. The ATO, because of all the data that they're getting from us now and yourself through your single touch payroll, they have all of that information. So you lodge a tax return and they're already looking for that information. The other side is when salary and wages might be recognised on a capital account. And so when might that be the case is if you've got an employee working on the development of capital assets of the business, maybe IP, business premises, and so then that might actually be capitalised and not a straight tax deduction. Where I'm seeing that more and more, and it probably is relevant for a few of you on today's webinar, is where they may be working on something that you're even looking at getting some grant from the government in relation to research and development or another particular grant, and it's not forming part of your expense, it's being capitalized as well. So just be aware of those if you are looking at that as part of a, I guess, a bigger picture situation. So again, looking at the timing issues, PAYG withheld and remitted on time, penalties for non-compliance, and then you've got the deductibility issues, and then the superannuation guarantee being late or missed. You're going to have not only the super, you're going to have the guarantee charge on that as well, and not being able to get a deduction as well. Making sure also, can you get this certificate of coverage that it's actually now been received? So if you have a challenge with that superannuation side, do reach out, because that's something that we're seeing that is kind of biting a few people when it's not being paid on time. Now, I've added in a few of extra topics that I'm starting to see come through. Now, we've heard help, or I always still call it HEX, and they've renamed it to kind of being a help. But basically, we're talking about student loans. Now, the student loans, you would have heard a bit of controversy going on, because in the past, they actually say, look, we don't charge interest on these student loans. We just index it for inflation. Well, inflation hasn't been that bad until last year. 1st of June every year, they index it, and it went up by 7%. Now, the government have come through and said that they're going to kind of cap that out. So that is going to be adjusted. We haven't seen exactly how they're going to adjust that for those in the past. But what does that mean as an employer? So you've got employees that have gone to university and done these studies and put their university debts onto the student loan. And so the students have actually got these debts owing. And as an employer, you're required to withhold. So what do you need to do as an employer? Now, the withholding rate has got higher and higher, and the cap has got lower. So basically, anyone actually earning less than approximately $55,000, they're not being required to repay their debt. But the repayment starts once they go over that threshold. So, it's 54,435, and then it's at 1%. The issue I have, unfortunately, when you're looking at this and you get your tax file number declaration for your employees, always make sure you ask them whether they've actually got a student debt, so that you can make sure that you can be ticking that box in zero, and it will automatically, once their income is over a certain threshold, start withholding that extra PAYG tax. Now, one thing that you might hear from your employees, they might say, oh, look, I've actually going to make some extra voluntary extra payments of my my help debt, and so I don't need you to withhold. You might then have to do a modification on their PAYG. But what's really important is when you're actually withholding the PAYG with installments, and you pay that to the ATO, and because you might have an employee who says, I'm going to pay a lump sum on my student loan before 1st of June so that I don't have extra withholding amounts. Unfortunately, as an employer, you're withholding the extra PAYG, it gets submitted to the ATO, but it doesn't get submitted to the ATO to say that this is PAYG in relation to their employment earnings, and this is the amount that we're allocating to go towards their loan. That's not the way it works. So if an employee is wanting to pay extra amounts and they want to have that withhold, they need to pay those extra amounts direct to the ATO before 1st of June if they don't want it to be considered as part of their 30th of June tax return when they go to lodge their return. I've seen that issue where some employees have thought, the employee said, you know what, can you just withhold an extra $5,000 so I can kind of pay my debt down? The employer has done that for the employee. That has been processed through, but the problem is when you've got to the end of the year, they've still had debt owing, and the lump sum, they've still got more payments coming off on their lump sum. It hasn't actually come, it's come as a lump sum on their PAYG withholding, not necessarily onto their student loan. So the employee has ended up with this big refund, and they're like, but hang on a minute, I took the extra $5,000 because I wanted you to allocate that to my loan that I have on my university loan. As an employer, you can't actually associate it to the loan. So just make sure you advise the employees they need to do that direct repayment themselves to be able to do that amount. With these thresholds, a lot of people also get confused that threshold represents that it is actually the percentage of 3% of the loan owed. No, it's 3% of your wage. So that's where that part comes. So even if they do make that lump sum and they pay off $5,000 off their loan, their wage hasn't changed, and next year they'll still have that amount. So when you go into your zero file, so when you've asked them, you don't need to go in and adjust anything on the PAYG. When you're actually going into the payroll, you just tick the box that they have a study, training, or support loan. You tick the box yes, and the system will do the rest and take it out based on what their employment issues, what their wage amount is. Now, child support, again, this is another free service that as a small business employer, you are assisting the government with, and it does actually, unfortunately, put a bit of extra admin on you. So with the child support collection by the employers, you're providing that extra service, because what happens is the child support agency has actually decided that a particular person has to contribute to their children and they're not paying it, and then so you will get that either they haven't paid it because they've got a personal arrangement, but you'll get a notification that says you must withhold X amount from your employee's wage every time you do that pay. So you can put that into your zero and you withhold that. If you need help with that, let us know. You will put another account. We put a CAS account onto your balance sheet. So you've got PAYG wages, PAYG for employment wages payable. So your PAYG, every time you do that, goes into there, and when you pay your BAS, it comes out. But on the child support, we actually put that as on your balance sheet, so that every payroll that you do actually will you'll have that withholding from that employee's pay, and then you will need to remit that, and that unfortunately is the extra admin that you need to do, because you'll process to your to the ATO for your PAYG employment, but you will actually need to, you deduct it from their payroll. That's the easy part. Once it's set up, that's the easy part, but then you will need to remit that within the time frame. You will get guidance on that provided. So they'll say, here's the employee, here's how much that needs to be withheld on a monthly basis. So if you're paying weekly or whatever that period needs to be, they will advise on that. But then here's what needs to be paid. So unfortunately, that is something that you're going to have to put so that you're then paying that across to the child support, so they can then assist on that side. But you can set up a lot of that in your zero and get that done as well. You will get, so as I said, the notification, you will get ongoing communication as anything updates. So you may need to update those amounts, and you will need to chat to the employee. Every time I'm speaking with clients that get that, and then they go to chat with the employee, and the employee is really annoyed because the employer now knows their personal situation. It's unfortunate you're going to kind of be the meat in the sandwich on that, but it is something that you're required to do and legally required to do. So if you need any assistance, just let us know. But once it's set up, it should be okay as well. Now, parental and maternity leave. I wanted to touch on this, and we do have some zero recordings on how to do this in your zero. It's your how-to. So you can see on our YouTube with some of those. So you've got maternity leave, and it's maternity and paternity. So it's all kind of, I say, a combination. It could be either or. It all comes under the same thing. So you do have what the government now has, paid maternity and paternity leave. So obviously this is leave that is now being granted when you've got an employee with the birth and care of their newborn. So this can be for the mother. It can also be for the partner as well. And there are set requirements. Now, I'm not the Centrelink expert, and I'm never going to pretend to be, because just when you learn the Centrelink rules, they change the Centrelink rules. So every time I get a question on this, how much is that leave? How long is it? I'm always going on to have a look at what that is at that point in time. But there is a set amount now that the government will pay for maternity leave, and it's based on the employees have been with you, they've been working. And the challenge that I do have, and if we look at it from an employer responsibilities perspective, you actually have, they have the right that they can ask for unpaid parental leave for up to 12 months. They can request potentially up to 12 months. You kind of have to hold that role open for them. So they're kind of your legal obligations, and Fair Work Australia can assist you with any of those parts. But it comes down to then what do you do on your maternity leave from incorporating it into the payroll. Now, the reason I highlight this is there's two ways. Now, I've had 3 that have gone on to leave, paternity leave over the last few years. And, the government's been very frustrating with it, let me tell you, because you do need to register. So employees can either go direct to the government or via the employer. So we've actually started with all 3 of mine, we've done it kind of direct. So I'll go on the next slide about they call it PRODA. Don't know how they came up with the acronym, but you actually have to register to PRODA. You normally get the employee will go in and register on their Centrelink side of things that they're going to be taking maternity leave at, upcoming maternity leave. You'll get an invite to go into the business portal, which will then go you into PRODA, which is kind of the Centrelink version of the ATO's business portal, and it is the Centrelink version. And you will get a request to accept that employee works for you and that you will be then taking on that situation. So with that particular situation, then you will be getting paid once that all gets activated. So you log in and you tick that you've done that, and I'll quickly jump to the next one on that side. I've just taken from and it's called PRODA, but where you can actually go in and they get their certain number of leave. Now, you don't have to pay that to the employee until you get it paid yourself. Now, this is the really big problem. In all of my situations, I have paid it to the employees at that time, because, obviously they're relying on money. Some of them didn't get the pay. Like, I didn't receive the payment from the government until nearly into their 3rd month of leave. So I look at that and go, okay, so I didn't have to pay that, and not everyone's going to be in a position to be able to pay their employee without having received that money. But how do those employees, how are they expected to survive when it hasn't been paid? And we've followed up with Centrelink on it, who just told us that they were very short-staffed at the moment and they were getting through that situation. Interestingly, even though, so 2 out of 3, the government did pay to me directly, even though all 3 were registered through us as Smart and that we were going to do it. One of the employees just started to receive the money direct into their bank account, even though it was going to be paid to us. And then, we had to go through that. So it is one of those things. It will be an absolute pain. So prepare it early, sit down with your employee and go, okay, you sit on your computer and do the request. I'll sit on mine as the employer, and let's see if we can get through this and get it all set up. But what that will be is, if it is coming through on your side, what I have done is just set up and we've done this actually, we have done a how-to in our Xero kind of YouTubes. We have done a how-to, but you'll set up a separate line item. So it's a fixed amount on the child support, because the other frustrating thing is the child support amount is a lump sum each week, and there's no tax withheld. So potentially you have to withhold tax. Now, there's no super on it, but that rule is changing. I don't have the specifics as to super on that, which I expect will be then included. So if you got a lump sum from the government of, say, let's just say it is then 900, that's going to be inclusive of super. So how are we going to put that into our system? That's only just kind of coming into play. So I haven't seen how that's going to plan out, but that's something to keep in mind, that there will be super going forward in the future on that. And then obviously, as part of your maternity leave, is trying to create that supportive environment on it, because I can tell you this is where it's something to have that dialogue up front with your employees and trying to get this set up, because I know that I've had a number of clients that there's been a real friction going on with their employee through no fault of their own. And that's why I want to encourage this open dialogue up front. If you've got an employee waiting to get their maternity leave payment from you, because it was going to be coming through yourself, and you were going to get paid from the government, and you're not paying until you get it received, and yet the government's taken the best part of 8 weeks, 9 weeks to pay you, and you've got that employee waiting on the money. I would be saying that early days, have that dialogue with them, get it all set up. And just because you've got it all set up doesn't mean you'll be paid straight away. they're notoriously late, and I find it very frustrating, because how are these mothers expected to be paying for everything and be waiting 7 weeks, 8 weeks? And I think it's not really good enough for them to say that we're short-staffed and not being able to do it, especially if you've got everything processed up front. Surely they can automate some of that. So I just want to reiterate that when you are going through this, is to just have that emphasis on the fact of, are you that both parties know that this could be delayed, because that has been my experience. Now, who knows, maybe they've improved their systems, but this is all in the last 12 months, that it did take nearly the best part of 3 months before they actually paid the first one. Now, termination of employment. Now, this is an unfortunate one, because I am seeing this more and more now, and it is expected, because, I guess we are kind of in recession, but no one wants to admit it, but we clearly are in recession at the moment. There are a lot of eligible termination payments happening. So what happens with your side as an employer? And I can tell you that we've received some kind of employees that have been terminated from their jobs, and even some of them with like local government and things like that. And some of the ETPs have been incorrectly calculated. So if you're not sure, let us know. If you've had someone who's worked with you for quite a period of time, feel free to reach out. The ETP rules, employment termination rules, did change. Now, why are those rules there? So employment termination, what they're trying to do is, when someone's getting a lump sum and it's related to a termination payment, what they're trying to do is actually tax it slightly better than they would normally. So instead of just having a lump sum payout and it being taxed at your normal tax rates, they're trying to kind of give, well, this is an employment termination payment. We've got some tax concessions that are available to it, just so that the employees are receiving that, and it's just not having as much tax taken out as well. So it does have to be as a consequence of termination. Now, the reason I say that is because sometimes there are employees who want a payment to be in a certain way so that they get some of these concessions, but you do want to make sure that you're not at risk on that side. So what are not employment termination payments? Any super benefits, unused annual leave or long service leave. Just because the person has been terminated and they get those payments paid out, those ones are not under those particular rules, that get a different taxing treatment as well. Amounts owing for work already done or leave already taken, any tax-free parts as well. And foreign probably doesn't relate to a lot of you. Any retirement exemption payments, maybe some personal injury payments, or any restraint of trade payments. So those are not eligible termination payments that are subject to concession. So let's just say that you do terminate one of your employees. What you'll often find is they'll come back to you and say, I shouldn't be taxed as much as this because of all of these reasons. It's unfortunately, some of these are not falling under those rules, so they don't get it. What are subject to the special taxing rules? Golden handshakes, could be the severance pay, payments in lieu of notice. So we've given you 4 weeks pay in lieu of 4 weeks notice. That is going to come under getting the special tax treatment as well. So unused sick leave, if you would pay it out, because you don't have to, but you may choose to do it. So wrongful dismissal payments. So some of those, if you're not too sure, we can go through, and these are the ones that we would then itemize separately, say in your zero file as different pay items, and tick whether it is super, not super, PAYG, not PAYG, or it is an eligible termination payment, which then the system can calculate the different tax on it as well. So what are some of the tax-free? What's tax-free or what's taxable? I can tell you the tax-free, we don't see it very often these days. Pretty much it's usually pre-July 83. Now, these days people don't stay in their jobs, for that long period of time. So we don't tend to see that. I see it sometimes with the council workers, or maybe they've worked with some of the government departments. But the taxable component is included in the assessable income, and some of it may be eligible for a tax offset. So that's where an offset is, so you get a tax deduction when you're doing your taxes. A tax offset is a lump sum. You owed $1,000 of tax, but we're going to give you $500 as an offset, so you only owe $500. That's what an offset is. So there's a 15% maximum rate plus Medicare if the person's reached preservation age. So that basically means, and preservation age is normally 60, but there's some transition rules, so if you're not too sure, that's to kind of help out, I guess, on some of the older employees that may get those termination payments, or 30% for everyone else on those. So you've got a maximum tax payable on an eligible termination payment of 30%. The reason they do that is some of those, I say, lucky people who get 2 years payout for leaving a job, you add that to your wage and get 2 years of wage at the one time, you're going to be up at the highest tax bracket. This is going to bring you down so that you're only paying a maximum 30%. Those that don't qualify for a tax offset are taxed at the top marginal tax rates, which is not great for those in that situation. So that's what we're doing. So what's the tax offset? We look at it, and it is a process to go through, and I'll go through a little bit of detail, not too much detail, because if you have it, we'll step through it with you. But there are some ETP caps for that particular year reduced by some ETPs in that year. There are caps for the prior years as well, and then there are the excluded payments. So what we would do is work with you on making sure that there's how long have they been working for you, and what did you pay to them as, yes, their annual leave is being paid out, but what did you give them as leave in notice as well? There are some caps on how much they can get. So if they've got up to 245, that's the maximum they can get. The whole of the cap is 180, reduced by then the taxable income. So I will work through those. What I wanted to highlight here is when you do have an eligible termination payment. Many of you might say, oh, I'm not going to be subject to that type of situation. If you make someone redundant, now with those new employer laws that have come in, which we'll talk about in the next webinar, is you're now 15 employees and you're subject to, you have to do redundancies, which is crazy. And I've seen a lot of my clients that, you know, they might have 15 employees because they're running a restaurant, but they've got 15 employees. They're not all full-time, but they've got 15 employees. So this is where these rules that would have really been only for the big end of town, you know, we were talking the small business number of employees was a lot higher. It was going to be 20 employees, now it's 15, which is unfortunate that it's actually brought some of these big rules down into the, so if you've got 15 employees or more, you do actually have to pay redundancies if you make someone redundant. So this is where you're going to see these things, unfortunately, coming in a bit more. So a summary on the ETPs, just so that you've got the, you know, what is it that you need to know? When do you need to put your hand up? There are some excluded payments. They only apply to the cap in that year, which has a few little squeaks on the calculations on that. And there are some in excluded payments. So if you do get some of those questions of when you pay that out to an employee, it's just making sure that you get it. I mean, especially when we had, you know, a local council who remained nameless, you know, couldn't even calculate their ETP for one of their employees correctly. That's concerning to me when they're a big organisation and had taxed it incorrectly. Is that a problem? Sometimes if you're taxed incorrectly during the year, swings and roundabouts, you get to your 30th of June tax return, you lodge your tax return, and if you've overpaid tax, you're going to get the tax back. So it doesn't, you know, net doesn't matter overall. When it's an eligible termination payment, if the tax has been taxed incorrectly, it's a problem. It means you potentially have paid too much in tax and you won't get it back on the tax return. Your employee won't get it back on their tax return at the end of the year because it hasn't been classified with, you know, getting that rebate, getting that maximum rebate off it. So they will be overpaying tax. That's why we definitely want to get it right on that side of things. And it needs to be a genuine redundancy as well. That's why sometimes I've seen where people are like, well, if you want this as a redundancy as opposed to this is going to give you, you can't make someone redundant today and then hire them on a casual basis tomorrow. There's some rules around that type of thing as well. So it's just when we talk about, again, the 12-month rule is, you know, if you hire them back within that 12-month period, some people say, well, look, I'll make you redundant, pay it all out. You'll come back as a contra and we'll do it like that. You lose your tax offset and those types of, so it has to be a genuine redundancy as well. One of the key things I'm always asked is this unused annual leave. Payments are included in assessable income. The tax offset can go up to 30%. And this is really only for employment before 1993, which we don't have that many. Otherwise, it's just taxed normally, okay? And this is where the confusion's about, where some people might, some of your employees might do a bit of a Google and go, oh no, unused annual leave is taxed differently. No, only if it was pre-93 that they've started with you. Again, also looking at the long service leave, again, that's pre of that date. So sometimes people can get a little information and you'll see this frustrations coming out, but those ones doesn't happen. If it's a genuine redundancy, there is actually a tax-free amount that we can do, which is kind of the base amount plus the service amount times the years of service. So at least they get some of that tax-free. Again, we need to calculate that and put that into the system and make sure it's all calculated. So what is a genuine redundancy? The payment in consequence of termination. They're dismissed from employment. The position is now genuinely redundant. They're dismissed before reaching the age pension age, and then there's no arrangement to re-employ them. If there's an arrangement to re-employ them, it's not a genuine redundancy, and then they just get taxed at the normal situation. So the conditions for payment, the payment exceeds the amount that could reasonably be expected to receive from a voluntary termination, and then the payment must not exceed the amount that would be reasonably expected if they were dealing at arm's length. So there are some kind of like catch-all situations that can grab those where people are trying to dress it as an eligible termination payment, as opposed, and as I said, that once you've done the taxes in it, it's not a case of the person doing their end of year taxes and everything will be trued up at year end. It's the way in which you tax it and you're reporting it in your single touch payroll to the ATO, and they will have it recorded on their side so that that income will be subject to that certain tax rate. So it is just something to be, I know you won't be all experts on eligible termination, and every time we do it, we have kind of a bit of a process we go through, because it's one that you just don't want to get wrong in such a situation, which is not a great situation to have going through. But, at the moment, unfortunately, we are seeing a number of businesses having to make people redundant. And then if their business does have the 15 employees or more, there is a redundancy payment that needs to be made in accordance with the award. So that's something to really be looking out for. So I thought I'd open it up if we do have any questions on any of these at the moment. So if we have any questions, let me know if you've got any questions. I can't see any coming through. If there's any questions that come through in particular, maybe I've covered it a lot. I know a lot of these topics are topics that it's not relevant to you until it happens. So hopefully with this recording, you can go back to that situation, or at least know now that you've gone through this. If this comes up, you know that you can come back to the recording or come to us, or know that you need to be aware of those. Our next session, it's not next week because I'll be off in the US for work next week. Hopefully I won't come back with another cold, but the following week we will have changing legal landscape. It's actually getting more relevant for all of us small business employers that didn't realise that we were going to be pulled up into all of these big employer type rules. So I've got a guest joining us, an employment lawyer, to go through some of those, so you can kind of come with your Q&A. Treat it as a bit of a free session on any questions that you might have in relation to employment law. So bring those questions along for our next session, and I'll get we can get those ones answered. If there's anything else as well, feel free to shoot it across to me, and I can add those. I've kind of added more topics on as I've gone along, as I've had feedback. But thanks everyone for joining today. And I hope you have a great rest of your week. Thanks very much.